Namaskar and thank you for joining us on the Economic Brief, the program that looks at key stories from the worlds of business, finance and economy and contextualizes them from a local as well as a global perspective. On the program, the first half of FY25 sees big increase in FDI and also total foreign investment inflow into India. What's bringing in this investment? The US President-elect Donald Trump's threat to charge 100% tariffs to BRICS countries and limit their access to the US markets isn't quite practical. We'll assess the possibilities. The political uncertainty in one of Asia's high-income economies, South Korea, is worth looking into from an economic point of view. That's what we'll do. We'll also look at the potential of India's gig economy. But first, let's take a look at the FDI inflows into India. And we can see that in FY25, in the H1 of it, that is the first two quarters, we are seeing an uptick of about 45% to $29.79 billion from the April to September first half of the year. And we can see that up to 47.8% is happened, that's $16.17 billion in just the quarter between April to June. So there's a significant momentum that is building up in FDI in our country. If we look at the states, we can see that Maharashtra seems to be bringing in the highest number of FDI, followed by, in fact, Gujarat, then there is Karnataka and Telangana. And what does FDI do? FDI helps in creating more jobs, obviously. It helps in improving technology. It helps in improving infrastructure. It brings in that multiplier effect. Where is the money coming in from? Which countries? What are the sources of FDI? We have, of course, Mauritius, which has traditionally been a place where a lot of FDI comes into India. And we can see that $7.53 billion is coming from there. The United States, $2.57 billion. The Netherlands, $3.58 billion. The UAE, $3.47 billion. Cyprus, $808 million. And the Cayman Islands, about $235 million. So this is as far as where it's come from. Where does it go? Important to figure out. Services, automobiles, components, I beg your pardon, computer software, all these aspects are areas where the FDI is going to, especially IT hardware, telecom, pharmaceuticals, chemicals. These are the areas which are drawing in, we have that magnetic effect in a sense, drawing in a lot of FDI. And we can clearly see that with this FDI, in fact, if we look at the whole forex, foreign exchange that is coming in, the total inflows is about $42 billion in that same period of time. So that is quite a high and a large number. Now, Russian President Vladimir Putin has praised the Make in India, and during an interaction with Russia Calling Investment Forum, which happened in Moscow, in fact, Putin lauded the government of India and its efforts in creating stable conditions for small and medium enterprises. He also highlighted the economic initiatives spearheaded by Prime Minister Narendra Modi with a focus on Make in India. Let's listen to what he said.
Prime Minister Modi has a similar program, Make in India, and this is a very similar program to ours, and we would be ready to place our manufacturing sites in India. Also, the biggest investment in the Indian economy to the tune of $20 billion by Rosneft happened not long ago, and the Prime Minister of India and the government of India have been creating stable conditions. And this is because the Indian leadership has been pursuing India comes first policy, and we believe that investments in India are profitable.
Well, we have with us Dr. Amitendu Palit, is a research lead for trade and economics at the National University of Singapore. He's joining us on Zoom link. Dr. Amit Kapoor is the chairman of the Institute of Competitiveness in India and a visiting scholar at Stanford University, California. He's joining us also from Gurugram in close to Delhi. And Narendra Wadhwa is with me in the studio. He's an economic analyst and looks at the stock markets very closely. Thanks for being with us. Dr. Palit, let me start with you. Now, the highest FDI coming in, does it show that, that we have diversified sectors? Just give me a moment here, sir. Where we look at more diversification in terms of manufacturing, should that be the case where this should go to, rather than where it's coming in services right now to sustain this kind of growth?
Thank you so much, Mark, firstly, for having me on the show. I think this is a very important subject that we are focusing on today, the year-on-year growth of a fairly substantial size that you mentioned. Insofar as the sectors are concerned, and as you indicated, there's a lot of FDI that is tending to concentrate in services and pharmaceuticals and IT hardware, in automobiles, and so on and so forth. So I think it's ideally a mix that we are looking at. In terms of the sectors that we are having, these are traditionally sectors that have attracted considerable amount of investments in India. They continue to remain top draws. But I think if we look at these sectors a little bit more closely, we will find that there are services which connect very closely to manufacturing, for example, telecom, which have become big draws. And these are connected to a lot of FDI that is coming in through the startup ecosystem space, particularly in the high-tech startups and the tech-intensive startups. And I would also like to indicate the upcoming sectors, which are essentially semiconductor assembling, chip assembling at the sort of the lower end of the supply chain, and also in clean tech and clean tech related products where we are investing FDI. But I would like to, Mark, draw a small word of caution in this regard. The numbers that you shared are for the first half of the year.
Yes.
And if you go back and take a look over the last 2 to 3 months, we don't have numbers for the long-term FDI inflows. But if you look at the shorter-term portfolio inflows, they actually began reversing from the second week of October onward, which is basically due to the uncertainty in the global conditions over the US presidential elections and a few other issues. So I will not be surprised if the immediate next quarter, the Q3, shows a somewhat lower FDI. Having said that, India continues to remain a strong bet as far as long-term, high-yielding locations among emerging markets is concerned.
Yes, Dr. Palit. Let me go to Dr. Kapoor now. Maharashtra, Dr. Kapoor, seemed to have attracted the highest FDI among states. Clearly now it's the most attractive destination. But how does one, market the whole of India? Also, how important is a state government's role in doing that?
This is a very important question in terms of saying that we have to market whole of India as one single destination. That is never going to happen because each of the states brings in its own sets of positives and negatives. The opportunities that arise in Maharashtra and the ecosystem that exists in Maharashtra attracts a certain level or a certain kind of investment. Or if you really look at the top 4 states, that is Maharashtra, Karnataka, Gujarat, and Haryana, all these states have something very unique at these locations. Like, so the investments that are happening in Gujarat would be on a certain area. Or if you talk about Haryana, it is going to be in automotives or even software. And when you talk about Karnataka, it has to be software and certain set of manufacturing. Maharashtra is all manufacturing. So you would notice that there is a certain positive that each of these states bring. In fact, the competition in the world is not about India versus the other locations or versus other countries. It is always going to be about one state versus the other, or one city versus the other. So I think the moment we ask that question, we will get it wrong. India is doing exceedingly well, especially a certain set of states. Of course, it does create a certain level of what I call disparity in terms of how FDIs happen, because 87% of the FDI is happening in the top 4 or 5 states. But it is always going to be the case. It happens across the world in any economic geography.
Right. Let's turn to Mr. Wadhwa now. As far as the stock markets are concerned, a lot of money came in, also started leaving once Trump started talking about tariffs and things like that, strengthening of the dollar. Money seems to be going back to the US. How do you view the, the FDI scenario, let's say going forward under the Trump term?
See, as you mentioned earlier, thanks for having me on the studio today. Say, this is the highest FDI in the first half of the year. This is 45% rise, equivalent to $30 billion. Although we had the highest year was 21-22, when we had $25 billion of annual inflow. So, but there is a shift in the sectors are there, as we were discussing earlier. Say, one is China plus one strategy these global companies are following. Second one is the focus of government on semiconductors and the new sectors like electronics. A lot of mobiles are being manufactured in India. So that is bringing a lot of FDI into India. Again, opening up of defense sector and other infrastructure sectors are attracting a lot of FDIs into India. And as you mentioned, there was outflow of FPI money from the market, and slowing down of the FDI flow. But we have seen the markets have taken it on the stride, and it's behind us. A lot of inflows have started pouring in, and there was a tweak from the RBI side also in the November itself, which says that if there is a FPI investment in any company beyond 10%, it will be taken as a FDI. So that will also, increase the numbers as far as data is concerned.
So that's an incentive, yes, indeed. Let's move on to our next story. In fact, recently the US President-elect Donald Trump had threatened to impose a 100% tariff on BRICS countries if they attempt to create a new currency or to replace the US dollar. He made this statement on his social media platform called Truth Social, emphasizing that the US dollar's dominance should not be challenged. How serious is this threat? Let's assess its potential impact in this report. US President-elect Trump has threatened to impose 100% tariffs on BRICS nations if they attempt to create a rival currency to the US dollar. However, the feasibility of such a move depends on US laws and international trade agreements. While Trump has used tariffs as a negotiation tactic before, implementing such a drastic measure could have significant economic repercussions. Trump had said on social media website Truth Social, "The idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy." The original BRICS members, Brazil, Russia, India, China, and South Africa, account for 37.3% of the world's GDP, against the G7's 29.6%. The new BRICS Plus members, which add countries like Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE, now account for nearly 1/4 of global trade. This expansion enhances BRICS' ability to challenge Western-dominated global institutions and promote mutual economic development among emerging markets. BRICS hasn't adopted a common currency yet. They proposed BRICS Pay, a digital payment system using blockchain to reduce reliance on the US dollar. A unified BRICS currency is still far from becoming a reality, facing challenges from diverse economic policies. At the August 2023 Johannesburg summit, BRICS committed to boosting trade in national currencies.
The substantive part of trade and economic exchanges and discussions that have been a part of BRICS discussion have so far, in a major way, focused on how to increase trade in respective national currencies.
BRICS would be exploring several strategies to counter Trump's tariff threats. BRICS nations will likely increase trade in their local currencies. They will also form stronger economic alliances within the global south. India's EAM told industry representatives that relations between India and the US are expected to grow stronger.
Different countries have had their own experiences from the first administration and would presumably draw from that to approach the second. I can state with confidence that the strategic convergences with the United States for India have only grown deeper with time.
Europe plans to increase US imports, including agriculture, LNG, and weapons instead of raising tariffs. US companies might join joint military procurement with EU funds. Several currencies like the euro, yen, pound, renminbi, Australian dollar, Canadian dollar and Swiss franc are gaining traction against the US dollar. The Reserve Bank of India aims to internationalize the rupee, potentially adding it to the IMF's special drawing rights basket for wider global trade use. The Economic Brief, DD India. Well, our guests continue to be with us. Let's turn to Dr. Kapoor. Dr. Kapoor, can the US seriously impose these kinds of tariffs without shooting itself in the foot?
Well, I think this is, if you really look at what President Trump is trying to say, is quite alike what he's trying to do for the local political system, for his local audience. It is a very difficult thing to actually suggest as to what he's doing. Because assuming that he does a tariff of 100%, it is actually going to create a huge issue within the US itself. Look at the kind of inflation that you're really going to be talking about. The very clear thing is going to be that it would start disrupting the global supply chains. We have already seen that if the disruption of global supply chains happen, then it creates a catastrophic system in various sets of economies. So it is not going to happen. And then, of course, high tariffs, what he's saying is that it is intended to create jobs or protecting American jobs. It could be very, very counterproductive because US does not have the wherewithal to create all that manufacturing within that system itself. So I really think it is more like a brash statement rather than actually taking it forward. This is more like a eyeball to eyeball kind of a confrontation, and he's just trying to create a local audience for it. Okay. I don't think in any sane mind this kind of an action would be taken because it would be detrimental. The second thing is that it might happen that they could actually say that, okay, now there is this possibility that does it, but does the American law allow this to happen? Can he impose 100% tariffs on certain set of trades without going to the Senate or the House, etc.? So those are going to be those big questions that will arise. But I think we should not really read too much into this and see that how we are able to improve trade over a period of time, because it is going. This whole new administration is going to create some tremendous opportunities for India per se in being part of the global value chains.
Dr. Palit, regional trade in currencies other than the USD, how successful has BRICS been actually in doing that?
Mark, that's an interesting point that you raised because, if I could share this with you, let's try to see where this threat, the perceived threat, is actually coming out of. It's coming out of a concern, and that concern is essentially in the fact that in the last 4 to 5 years, particularly post-COVID, the American dollar has increasingly become a more and more difficult currency for a lot of countries to invoice their trade in. And that is because the dollar has become very hard vis-a-vis the respective national currencies. Now, this is where a country like India, a country like China, and to some extent even a country like Russia has actually proposed their national currencies as alternatives. So that there are countries like, let's say, for example, Sri Lanka, Bangladesh, and certain other countries in Southeast Asia who are happy to actually accept the Indian rupee as a currency for invoicing their trade vis-a-vis India. And in some cases, it might actually become a bigger operation if such countries look at India as a common hub, or for that matter, China as a common hub for using their national currencies. Now, let's not size up the fact that the digital yuan has already become operational in a lot of wholesale spaces within the country. It's about to get a retail dimension. India is proceeding successfully on digitalization of its own currency, and you might actually see over the next 3 to 4 years a period when several of the BRICS economies, along with other emerging market economies, might start trading more with the rest of the world in their own currencies. As for the partner currencies, these are more efficient options. What that would mean is relatively lesser demand for the American dollar. This does not mean entire de-dollarization. It just means greater choices for the trading world. That might not be the best of prospects for President Trump. I think he's trying to preempt that possibility and create a kind of an apprehensive scenario looking forward for these countries so that those moves can be nipped in the bud.
Right. Mr. Wadhwa, to what extent can the BRICS Plus actually create a new economic order, in a sense, that the US president-elect seems to be fearing? Because, this is almost 1/4 of global trade. that they have, and about 37% of GDP.
37% of the GDP and the huge population,
Exactly.
huge consuming class.
Right.
Fortunately, I have been part of this BRICS delegation 4 times.
Okay.
Brazil, Johannesburg last time, and Russia. So it is all the time agenda of the BRICS country to de-dollarize basically somewhere and to have their own currency. But I feel internally very, very difficult, different kind of challenges, different kind of economies. They have strengths of their own, like Brazil is a commodity focused country, and so is Russia, and different dimension. Ours is service based economy, very difficult to have this BRICS currency. And we have seen in the past also, Trump in last tenure also, when there was talk of de-dollarization by China, I mean, we saw what could happen to the China and China currency. So again, this threat is somewhere real also. I don't say it's just unfounded or twisting of the muscles only, or this thing only, because he has all the time worked with the tariffs. In earlier tenure, and this time 100% definitely it's very, very difficult.
He's just
to
probably,
go
it's just,
but again,
it's just like a, I mean, he's just making a point. He
yeah,
probably doesn't
making
mean
a point, and yeah, definitely he's going to work with these tariffs, and especially when there is a talk of de-dollarization by a BRICS country like this.
Okay, we leave it there. Thank you very much, Mr. Narendra Badwa, Dr. Amit Kapoor, and Dr. Amitendu Palit. Thank you very much for joining us and enlightening us on these important subjects. Moving on then to our next story. South Korea is in turmoil following a series of controversial events. On Tuesday, President Yoon Suk Yeol declared martial law only to withdraw it abruptly, causing confusion. Meanwhile, his wife faces corruption accusations, and opposition lawmakers have rejected his budget. Public anger is escalating, with protests demanding his resignation and arrest. Diptanshu Kashyap reports.
In a dramatic move, South Korean President Yoon Suk Yeol declared martial law, citing North Korean threats and anti-state forces within the opposition for the first time in over 4 decades. Forces entered parliament, triggering chaos as lawmakers voted against the decree. After hours of mounting pressure, Yoon quickly reversed the decision, plunging the country into deep political uncertainty. In the backdrop of this chaos was Yoon's many scandals and a failing economy.
So this is really an extreme move that may signal, I think, the president's lack of political experience. He did not hold elected office before, and so maybe he's frustrated with the way politics is going in South Korea, and resorts to these extreme and possibly even illegal moves.
A controversy involving his wife, Kim Keon-hee, was especially damaging. She is accused of accepting a luxury Dior handbag worth $2,200 from a US-based pastor named Choi Jae-young, sparking widespread allegations of corruption and influence peddling. South Korean law bans public officials and their spouses from accepting gifts worth more than $750.
It was an experience that I've only seen in movies, and I realized how much more serious it is than I had imagined. The current economic condition is difficult, and the fact that the president is causing such anxiety among residents makes the situation so much worse. I'm deeply disturbed by this kind of situation, and I'm very concerned about the future of the country.
Yoon's troubles deepened after the opposition rejected his government's proposed budget. The opposition slashed around $2.8 billion from the proposed $471.5 billion budget for next year, prompting Yoon's complaint that all key budgets essential to the nation's core functions were being cut.
Even if martial law is lifted, he cannot avoid treason charges. It was clearly revealed to the entire nation that President Yoon could no longer run the country normally. He should step down, resign immediately. This is the mandate of the people.
As political instability mounts, South Korea's financial markets are on edge. South Korean shares fell nearly 2% at the open on Wednesday following the overnight declaration, while the won dropped to multi-year lows. Though the market trimmed some of its losses later, the volatility is adding pressure on the country's already fragile economy. Diptanshu Kashyap's report for the Economic Brief, DD India.
Well, that's all we have in this edition of the Economic Brief. We leave you with this story by Anu Kaushik on India's gig economy, which is rapidly growing, providing jobs for millions, especially in Tier 1 and Tier 2 cities. The sector is expected to gross around $455 billion and significantly continue to boost India's GDP by 2030. Here's the report.
From groceries, medicines to gadgets, everything is at your fingertips. All you need to do is to log into an app and place an order. Sometimes you can get the items within 10 minutes.
Since I'm living alone, at times I couldn't make my food by myself. So I can just order anything that I want and it's just a one click away.
Welcome to India's gig economy. In such a setup, companies hire independent workers mainly for a short term. In India, delivery partners of online food delivery apps like Swiggy, Zomato, and quick commerce firms like Zepto are the most visible faces of the gig economy. According to the Niti Aayog, the country currently has 7.7 million or 77 lakh gig workers, and the number is only going to rise. A latest white paper called Shaping the Future of Work, Empowering India's Gig Economy has said that the sector will create 90 million or 9 crore jobs in the long term. It is also expected to rise at a compounded annual growth rate of 17% to reach a gross volume of $455 billion by the end of 2024 and contribute 1.25% to the GDP by 2030. The trends will be particularly apparent in Tier 1 and Tier 2 cities. For many, gig economy provides an alternative revenue stream. For some, it is the only source of earning.
हमारा जो काम होता है डेली का डेली ऐप में शो करता है, कभी 1500 हो जाता है, कभी 1400 हो जाता है. जो काम होता है वो अमाउंट ऐप में शो करता है और पूरा पेमेंट संडे तक आता है, सोमवार तक आता है. तो पेमेंट का कोई इशू भी नहीं है, काम भी सही है.
Opportunities in the sector are aplenty, but so are the challenges. Workers generally fall between the organized and unorganized sectors. They often lack benefits like health insurance and sick leaves. Workers also battle long hours and hard to reach targets. They are also unable to find time to boost their skills, which can help them in the job market. Taking note of these issues, the union government has formed a committee to suggest framework to provide welfare benefits like disability cover and accident insurance to gig workers.
Platforms like Swiggy and Zomato are part of daily lives in India. With this, the gig economy has become a defining feature of the Indian economy. But as more and more people are expected to join the workforce, there's also a growing need for reforms, including ensuring social security and skill development for workers and regulating working hours. With camera person Kamlesh Kumar, this is Anu Kaushik reporting for the Economic Brief DD India.